This is the briefing for Monday, January 5th. I hope everybody had a great holiday season. The 2 weeks that I took off, basically just just scouring the market and looking at potential opportunities, was certainly well deserved. It was a nice rest, and the holidays were great. I spent today kind of working on my own performance analysis for 2025, and turns out that it was a pretty good year. And I'm looking forward to 2026 because I think it's going to be a much even better year. So what we're going to do is we're going to keep watching throughout the year the price development, and we'll be looking at what happens from an internal perspective as that development occurs in multiple time frames, whether it be to the upside or to the downside. So for right now, I want to start the year off and start today's briefing off with the longer term charts, the daily charts, because I think that getting a context of where we are in terms of the longer term time frame will be much better in terms of then looking at what happens in the short term. Now, this is the spiders on a daily basis, and you can see that it's basically been in a trading range for quite some time, even though we had quite a positive bullish day in the markets today. You can see that we're testing the upper extreme that comes in right around the 690 area in the spiders. So this is a really critical area. Now, the other thing to look at is that what's happening right through here. This area right through here is a really important area as well, because what happens is that when we get an area of rotation like this, you get an upper extreme and a lower extreme, and those are support and resistance. And when those areas are approached, typically traders know, the market knows that they are support and resistance. So what happens is traders and investors step back to see if there's enough strength in the market to drive it through those prices, and then you get potentially a pause. And this has been a pretty long pause at this upper extreme. The other thing I found out, and it's a higher probability, but it's not a 100% probability, is that when you get a rotation like this at an extreme, whether it be the upper extreme or lower extreme, that typically the longer it lingers in this area, the higher the probability of a rotation back to the downside. In other words, that if it doesn't break out fairly soon from this area, we potentially could see another rotation back down to test this 651 area. Now, this area here, this right about in the 675 area, and I should put a trend line up there, but that's going to be critical. That's going to be your really important support area in terms of what's happening within this area of rotation. And then, of course, the 691 area, 692 area, is upside resistance, and a breakout of that would be a breakout of this entire rotation and this rotation. So it's a multiple time frame breakout. If accompanied by strengthening internals, that would then suggest that we are going to be making more new highs during this year than I think anybody anticipated. A little bit of concern over the volume for today. Volume in the spiders dropped off. 52-week highs minus 52-week lows improved. And this goes all the way back into 2025, goes all the way back to November of 2025. And you can see that market breadth was declining along with net volume as well as we progressed through this shorter term rotation at the upper extreme of this area of rotation. Looking at the Qs, we have a little bit different scenario here. You can see this rotational pattern right through here. You can see the up and down movement, but this rotation here is taking place in the middle of this range, not at the upper extreme as it was with the spiders. So it's going to be important to see what happens here. Now, breaking this 625 area would suggest a test of the upper extreme at 637, and then breaking the low from Friday would suggest a break of the 610 area, would open up a potential break down to test the lower extreme at 585. So from a shorter term basis, the Qs give us a little bit better potential move in terms of if we're rotation bound in this area through here. So we could get a trade-off that would test the upper extreme and a trade-off at the low of Friday to test the lower extreme. you can see through this rotation here, same thing happened as in the spiders. Breadth in the NASDAQ declined. Although we had a pretty nice spike in market breadth in today's trading, surprisingly not seeing price move as much as I would have expected. Also, along with that was a pretty nice spike in net volume as well, suggesting there was more strength coming in. But must have been hit with some selling because we really didn't get much of a price move in terms of the NASDAQ today. Now the Russell was on fire, and you can see that this rotational pattern here, we had a false breakout here, a false breakout there, and then of course we got this rotational pattern here, and then this rotational pattern here. Watch this 265 or 255 area. That's going to be critical. If the IWM breaks 255, that's going to open up a test of potentially this 258 area, and if that does not hold, then we've got a really strong breakout in the Russell and the IWM. Breadth increased nicely. Volume fell off slightly, but not like in the spiders and in the Qs. Net volume advanced also, which is suggesting some improvement there as well. Now let's look at the shorter term development. So this is an hourly chart of the spiders. So you can see I've marked this rotational pattern right through here. So you can see this move back to the downside. We came off a low, rotated up to about the 691 area, then back down to test the 680 area, and then of course up in today's trading. Watch the high for today right around the 689 area, and then of course the low for today right around the 686 area. Breaking those, the range of today will suggest a test of the upper extreme, which is a multiple time frame resistance area, so keep that in mind. Breaking the low today was going to open up a potential test of the low from Friday, which comes in right around the 680 area. Same thing is true with the Qs. You can see this area right through here, the rotational pattern from today. Watch what happens if we break the high at around the 621 area, and then of course the low comes in right around the 617, 616 area as well. And the Russell, a little bit different. It was on fire today. It didn't just gap up and then pause for the rest of the day as the spiders and the Qs did. It gapped up and it ran. So watch, if the trade's above 253, you're likely to see a test of the 255 area. And then as to the downside, these were pretty strong moves. You can see volume was pretty heavy. So watch what happens at the low for today, and a potential test of the low coming in around the 246 area also. Looking at overbought and oversold, you can see we're approaching an overbought condition in the NYSE, and we are short-term and medium-term overbought in the NASDAQ, which is a little surprising based on the lack of price movement compared with the other indices, especially the Russell in today's trading. So this could suggest some type of pause or rotation or counter trend rotation for tomorrow's trading. I did not trade in today, at least in the indices, but I am going to look for a potential pause tomorrow in the indices from a shorter term basis, and even some type of rotation back to the downside. Then I'm going to look to I'm starting the year with a bullish attitude, and so I'm going to be looking more towards buying this market than selling the market. But then I have several other trades on in individual stocks, which I will either continue to hold to the long side or will begin to short some positions as well. So I'll pick this back up again tomorrow for subscribers. Have a great night, and it should be an interesting day in trading for tomorrow.